Bitcoin starts a new week with bulls gunning for all-time highs as February's BTC price transformation continues. After a solid monthly close, the first weekly candle of March completed comfortably above $60,000. As anticipation mounts of what may come next, sellers tacitly accept that there may be nothing in the way of Bitcoin heading into price discovery. The scenario marks one of the most optimistic outcomes for 2024 and considerably better than what many traders and analysts expected. That said, plenty of volatility hurdles remain in place between now and the end of the months. And April's block subsidy halving remains a pivotal moment in itself. The action gets underway almost immediately with the United States Federal Reserve due to provide guidance on the state of the economy. Should this offer no surprises for risk asset traders, crypto already has enough to contend with. The exchange traded funds may continue buying BTC. Still, the average investor is now acting out of extreme greed. Can market trajectory sustain its recent trend, or is a more substantial correction and consolidation period possible? Crypto Moon looks at the current state of Bitcoin markets at what could become a watershed moment for the current BTC price cycle. Bitcoin began the week with a bang on March 4. The weekly close sparked a $2,000 hourly price swing, which included a new multi-year high. Data from Crypto Moon Markets Crow and TradingView confirms $64,282 was hit on Bitstamp, with BTC USD now acting even higher, near $65,000. Barely $5,000 separates bulls from new all-time highs, capping year-to-date gains of over 50%. On-chain statistics resource CoinGlass confirms, and they don't need all those meetings, and I think what they're good about those problems. So optimism really consistently an interesting timeline to read today. 50% calling for considerably higher, 50% calling for market to rug. Typically this occurs each week tempo. However, this is noticeably more split than usual. Popular trader Skew wrote in his latest post on X. Skew referred to consensus for upside continuation around the sensitive all-time high level from 2021. So far, other local highs from that year have failed to act as resistance for long. On the more cautious side is venture founder, a contributor to on-chain analytics platform CryptoQuant. And what's going on is that, and I go at it the time, but I heard Tempo and Tenet back to the city, and what I do is at this moment is this is a brutal test for bulls and bears alike. Would you be ready for this? BTC rally to old ATH to take out all the bears, then after halving has a correction towards $50,000 or $40,000 Bitcoin, take out all the bulls, he wrote. Contrasting the opinion is the argument that in broader terms, crypto investing is still not on the radar of the mainstream majority. Should this change? A new wave of viral interest in both Bitcoin and altcoins could materialize, fueling an increasingly parabolic market. Bulls in complete control heading into the weekly close. Analyst Matthew Hyland concluded at the weekend, and delving into the chances of a correction is Charles Edwards, founder of quantitative Bitcoin and digital asset fund Capriole Investments. Adopting the sober mood this week, Edwards, who has placed considerable importance on the impact of next month's halving, is unconvinced about recent moves. Even if a snap turnaround does not occur immediately, he argues the residual fervor from last month may simply be taking longer to fade, and, quote, froth can remain for 2 to 3 weeks before a flush. So that means mid-late March, potentially, he warned. And Edwards stressed that he's not bearish from a long-term standpoint, as an investor risk management is necessary, particularly with markets at such crucial historical levels. And price can always go up. It's just risk, maybe a month in probabilities. The risk profile here is very different to when Bitcoin was 16K, for example. Simply something that keep in mind for a portfolio. Minigot said he continued. Early 2021 saw a similar period of euphoria throughout crypto before coming to a head in early Q2, with a subsequent correction keeping new all-time highs for Bitcoin off-roamer market, and fortunately into the red phase correction. Accompanying concerns of overheated markets are some of the highest funding rates in history. According to current CoinGlass data, some platforms are even seeing more than 0.1%, while largest global exchange Binance is itself at nearly 0.05%. Open interest, a key precursor to BTC price volatility, tells a story of its own, hitting a giant $27.7 billion on March 4th. And despite this, one analyst noted Bitcoin's larger market cap last week means that the OI tally has more room to grow. Bitcoin for it is open interest and notional value is approaching all-time highs. However, when you divide it by the current market cap, it's sitting at just 2.25%, a historical average. James Van Straten, research and data analyst at crypto insights firm CryptoSlate, summarized in part of an X post. An accompanying chart from on-chain analytics firm Glassnode showed a similar situation on both Bitcoin and largest altcoin Ether. This week, meanwhile, began with CME Group's Bitcoin futures initially trading several $100s higher than spot markets. The Fed, and in particular Chair Jerome Powell, is the highlight of the upcoming macro week in the U.S. over 2 days beginning. March 6, Powell will testify before a House committee and Senate panel, giving policymakers an update on the economy. The biannual event is expected to see Powell maintain now familiar narratives on inflation and interest rates. The latter is especially pertinent to crypto and risk assets, with a long-awaited rate cut have to boost performance. So far, this is yet to happen, and recent macro data has made markets push back the odds to later in the year. Powell is expected to maintain a hawkish stance in his semi-annual testimony to Congress, signaling to markets that the Fed is in no hurry to cut rates, a group of Bloomberg analysts summarized this weekend. If that leads to tighter financial conditions, it will keep the pressure on the economy and raise the chance of additional lag impacts from monetary policy. And while markets see little chance of a further rate hike to come, the chances of a March cut were almost zero as of March 4th per data from CME Besides Group's FedWatch tool. In his weekly rundown of upcoming macro events, trading resource, the Kobayashi letter, nonetheless hinted that plenty of volatility was to come before the Fed's decision due March 20. We are currently 17 days out from the long-anticipated March Fed meeting. A lot is happening before then. It concluded on X. Data due in the coming days includes non-farm payrolls at the end of the week. For the average crypto investor, the lure of all-time highs is having a familiar effect on sentiment, and multi-year highs, special cryptos, where any of them sign up, and ability to roll muscles. According to the Crypto Fear and Greed Index, levels of extreme greed are at multi-year highs. And 8,200, these are increasingly at levels which have historically marked market turnarounds due to unsustainable trajectory. Analyzing social media phenomena, research firm Santime last week also implied that more attention on price may contribute to a cooling off phase. Following an explosive February full of some of the biggest monthly market cap gains in crypto's history, discussions have increasingly moved toward price-related topics, mainly Bitcoin, AI tokens, and PEP, it noted after the monthly close. An accompanying chart showed the change in frequency of certain topics appearing on social media platforms over time,